All right, we're going to get started. As I said, my name is Scott Zagurski. I'm the Senior Director of Marketing here at Assurity. And for those that you have signed on, you probably read our buzzword bingo headline here on how to grow your sales in the next 100 days. Hopefully, we're able to give you some tips today on how to do that that you'll find useful. As far as the webinar itself, if you have any questions as we're going on, feel free to submit those for us, and we will get those handled probably towards the end of the webinar and get those compiled. I am joined by our Manager of Underwriting Services, Lindsay McPeak. Lindsay specializes in disability underwriting here at Assurity and is going to go through some case studies with us later on today. But we're going to get started. So how do you grow your sales in the next 100 days? So our agenda for today, we're going to go into looking at life events and really one main life event and kind of going into some of the data a bit. We are going to give you ways to prospect folks a little bit differently or better. We are going to give you approaches to underwriting and tips on how to make your life easier through that path. We have some tools and new tools that Assurity has been developing, maturing, and using. And then at the end again, as we talked about, we'll have our Q&A to wrap up. So where are we going life events track here? Well, it's home buying season in the next 100 days. So as we look at how can you grow your business in the next 100 days, we are really looking at that main life event trigger that is either buying your first home, changing homes, second mortgage. Those event triggers really make people look and review their finances, as you all know, who have been selling business for a long time. So as the weather warms up, so do the home sales. And even though markets can be up and down, and depending on where you are in the country, it can be both seasonal and geographical. But we are seeing the trend for a lot of hope down the mortgage lead path, and ultimately how that ties into products here at Assurity. So we know that when somebody goes to buy that first house, they really do start looking at, what do they need to protect? Starting from that first, mortgage protection that ultimately they're going to sign with that first mortgage contract that really protects the bank and not them. And then as they move on and start filling that house with kids and other things, they look down either property and casualty perspectives first, obviously, to get coverage and protection there. But what we want to do is take a look at some other things that they need to cover today. So right now, there are a couple of homebuyer myths that we wanted to kind of talk about and maybe dispel just a little bit from a marketing perspective. So right now, we like to put labels on things as societies and marketers, definitely. We look at millennials as being one of those labels, and we say that young people don't buy homes anymore. Well, for years and years, the average age of a first-time home buyer, really over the last 30 years prior to this last decade, was 29 years old. Here in the last decade, that has bumped up a bit, it is true. The average age of a first-time home buyer is now at 32 years old. And they really have dropped off from the total percentage of that demographic. It's 35% of all homes are first-time home buyers in that millennial path. But ultimately, even though those numbers are down a bit percentage-wise, the vast number of millennials, as far as the amount of people buying mortgages, is very big and a very big prospecting opportunity still, just because of the fact that there are so many millennials. So the fact that their percentage overall is down is something that is concerning, I'm sure, for real estate agents and other people in the housing market. But compared to Gen X and other generations, the vast numbers of these millennials still provide all those opportunities for you to prospect and look at those life event triggers in order to sell them insurance products. So we look at that they're older, that they're not buying homes anymore. I think that ultimately things have fallen off a bit, but there are still as many people out in that space that we can target for insurance and other products as there were numbers-wise 20 years ago. This is kind of an eye chart on the PowerPoint, and you'll be able to download it. But when we look at the trends for first-time homeowners, and this is pulled up using Google Trends, we definitely see spikes on those charts, which kind of looks like a heartbeat. It hasn't flatlined, which is good, so another way to dispel the myths, and there's a lot of seasonality within those spikes. Also, for different parts of the country, as we were talking about before, that people looking to buy a home, it will fluctuate. We've seen, the effects of mortgages and foreclosures in certain areas of the country. In some areas of the country, they're very rich on the kind of buyer versus seller market. And going out to Google Trends and just doing basic searches for your area, here on this chart, it's over-indexing right now, meaning more people than normal are looking for first-time homeowners, first-time home buyer programs in states like New York, Missouri, Pennsylvania, Florida. So in Iowa, it is really overspiked here in the last 5 years. So depending on where you are, these are great tools that are free for you to use. There's a lot of people that will sell you mortgage leads out there, as you are all familiar, who are agents or producers, or people are helping producers generate those leads out in the field. But ultimately, to see if these things are viable really where you sell insurance, ultimately use tools like Google Trends to find that out. So again, to kind of follow up on our point on millennials, they have been the largest home buying group for 5 straight years in a row. So I wouldn't worry too much about this trend going the other way. There will be the next label that we put on things, and people like my kids who never leave the house, who are Gen Z and face to an iPad coming up, and it'll be interesting to see as that demographic gets in the workforce, about 10 years from now, how these trends go. But ultimately, right now, millennials are going strong in the home buying market. Another market that you really do want to pay attention to right now in home buying in that life event trigger is the Hispanic market. There has been a real growth and a consistent growth for this group now for quite some time. Over the last decade, 62% of the total net gain in home ownership has been the Hispanic market. Now, I know all of us aren't necessarily in that market or know how to address the market, but we simply can't ignore these numbers. Hispanics and the middle income market, which is what Assurity really is famous for handling. I mean, that's really where we focus our products and our efforts on people who really need the insurance. Our mission of helping people through difficult times is never more apparent when you have middle income or lower income people who are living paycheck to paycheck. That's where coverage really matters most. And when we look at this middle income market, we see the growth from the Hispanic population to be a huge part of this. Now, their average age of being a home buyer is 37 years old, so it does skew even older. I think, looking at the splits, we've got 3.5 million Hispanic households with a net worth of over $100,000 in 2018. Again, showing where that middle income market and the Hispanic growth has been real here over the last 10 years. So the other portion of this market that ends up being an important one to look at from an insurance standpoint is the Hispanic homeowner market really is focused on multi-generational households, with about 27% of these Hispanic households having multi-generational relationships there. So obviously what that means, their parents, their children are all under the same roof. So they all have different needs. they all really rely on that home to support them both now and in the future. And the one quote that I wanted to show here and the importance of that market, for home ownership has always been a central pillar of the Hispanic identity as well as it relates to their economic prosperity. And once you've reached that goal and you feel like you have that economic prosperity, you do what you can. Middle income people are very hardworking. They'll do what they can to keep that prosperity going, but sometimes they need a little help and protection on what ultimately matters most in paying that homeowner's bills. Now, a lot of you out there would use mortgage leads and turn that into a life insurance sale. And I think that's been working for a long time to varying degrees. I think the one thing we would ask you to take a look at and pivot on a bit for a mortgage is on disability insurance. Our disability insurance product is really geared towards these folks who are middle income earners, who are kind of not your doctors and lawyers, but the folks who are the white collar, gray collar, blue collar rungs below that. These first time home buyers, in that market, Hispanic families that are at 100K are really our bread and butter. But disability insurance for a lot of agents is very confusing. Morbidity versus mortality, getting that stuff right through underwriting and applications, disability insurance and submitting those apps is something that a lot of people just dread and move away from. So what we'd like to really do during the rest of this webinar is focus on, well, how can we make that easier? How can we make that focus on just protecting the thing that ends up being your most important investment early on in life, which is your mortgage and your home, which is why that life event trigger works. How can we make that an easy pitch for you to grow those sales in the next 100 days? So focusing on the home as part of the DI sale versus traditionally the pitch from agents ends up being, I need you to cover 60 to 70% of your income, and looking at DI. And you'll go out and you'll do a pitch or a calculation or a fact finder. That ends up being part of the sales process up front, in the prospecting funnel. And that really confuses people right off the bat. The 60 to 70% interjecting math already on something that they're anxious about right off the bat sometimes can turn people off. The other thing that we do as marketers is we will throw lovely acronyms at you constantly. MUG ends up being one that is used quite often in needs assessment for disability insurance. Now, the M in MUG is mortgage, and that's what we're going to focus on today. Because we believe by just focusing on the mortgage and the cost around the mortgage, that will help you increase the sales, either from mortgage leads you already have, or turning those into DI sales that will help you long-term, and looking at the form of renewal commissions versus just upfront on the mortgage term business. And then the last bullet here, which I do want to talk about, ends up being real important. For most states and occupations that we have, really, for benefit amounts under a $3,000 benefit a month, which you're going to see when we focus on just mortgages is fairly easy to hit. We don't require any medicals in our underwriting process, nor do we ask for any income verification. So what becomes a tougher process in getting those apps through the door, the things you're not used to doing on a life insurance app always, right? We're looking at how do we make it easier for you to get that done. And we really believe in disability income insurance because we see these claims on the other end. We see that the need is real. We know from stats that are published out there, 2 out of 3 American bankruptcies are tied to medical issues. Why that's important, right? You don't usually think of medical issues when you think of disability. You think accident first or something happened. But illness is such a driver of these types of claims. Having a heart attack, cancer, these extended chronic illnesses that would put somebody out of work and not having then the income to provide is really what starts people down the path of these issues of bankruptcy, ultimately foreclosures and being out of their home. So what we want to do during this process is simplify the pitch to making sure the need is real, that showing that ultimately that, you understand these people that you're looking at in a different way, that the family and where the family resides ends up being the paramount thing, that ultimately people are really concerned about, the roof over their head, having that type of security as you're building family ends up being extremely important. And the main way that you are paying for that home is from your income. So we want to protect that first in a financial plan. So as we look at, instead of just getting lead forms, from mortgage leads and contacting those firms that will dump those in buckets to you, you all have the ability to go out today and look at prospects in a different way. At Assurity here, we really encourage agents to look at markets from the way they look at the rest of their conversations and communications on a daily way, which is via social media. It took our staff here a whole 8 seconds to find a house posted here on their Facebook feed, which is the screenshot you're seeing. I'm sure if you are on Facebook or other social media channels, these things are not foreign to you as you see people posting houses or sharing somebody else's posted house all the time. Prospects come to you, and how you engage and communicate with those prospects is important. You just don't want to do a direct push and sale all the time, but knowing that people are on this events track, knowing that people have these life event triggers can be foot in the door means of you to start conversations. And the one thing that really gets neglected on Facebook is the search bar that's right there at the top. If you just type in buying a home, selling a home, your network is going to provide all these listings that will be as part of your reach. And other conversation starters will certainly come from that. But we encourage people here from Assurity to our agents, we really stress that social media will provide a lot of prospects. And if you're interested in our social media guide, we've produced one of those that has been well received, and just kind of how to attack these markets, how to actually have conversations in the right way that then lead to sales. And so if you're interested, we will post links to those materials after the fact. So we know the home market's growing this time of year over the next 100 days. We know there are certain aspects of that market that are truly growing. There's one other part of this market that I want to stress upon. It's the people selling the houses. Real estate agents, realtors are a unique opportunity for you. Not only do most of us know somebody that's a realtor or have had a realtor, they are the most benefits-rich bunch. Most of them are working for organizations that, unlike a lot of us who might have a disability coverage through our employer, realtors are really underinsured in this category. At Assurity, we've always embraced this particular market. We have, from an underwriting perspective, looked at them a little bit differently than some of our other carrier competitors out there. So what's on this slide shows that if, for a general real estate agent, we're going to rate that person a 4A in our underwriting. Some other people in the industry, some other carriers, are going to look at them a little bit differently depending on how much money they're making. And so if you have this type of person in your Rolodex, in your sphere of influence, first of all, they typically don't have coverage, so you should look at them as far as prospect material. And if you have placed this business with other companies in the past, we really would ask you to take a look at us, because we'll get you a good rate because of how we rate them from an underwriting perspective. Lastly, what I want to go over with you just from a data perspective is if we just focus on the mortgage, what can that do for your sales? Well, it simplifies it, right, by what their average monthly mortgage payment would be to cover that average monthly mortgage payment. But in the United States right now, and obviously it really varies on where you live, but the median price for a home is for almost 96% of the homes in the country, the median price for a home is $350,000. That gives you an opportunity when you just focus on mortgage only of roughly a $1,600 benefit a month, which for folks who are living paycheck to paycheck, to expand your reach in sales, to reach a middle market, keeping that monthly benefit in line with a monthly payment that would keep them within about 1 to 2% of their income is key to the sale and simplifying the sale. So we want you to keep those things in mind as you look at maybe approaching this market a little different. We think, these sales of $1,500, $1,600 just base without any riders are great opportunities for you to grow your market at younger ages on a DI product for this life event trigger. Now, to look at a bunch of different sales approaches and how the sales concepts become, process and underwriting, I'm going to bring on Lindsay McPeak to go through some case studies with you to kind of show what those would mean in the reality day-to-day of processing business.
Thank you, Scott. Now everyone's favorite topic, right? Underwriting. We all love underwriters and underwriting. We make it really easy for you guys. So what we want to talk about today is how we can make this process easier for you with these mortgage leads. So what we like to do, we set ourselves a little bit apart from other carriers, is that our underwriters like to work with you. We want to work with you to provide the best offer possible. So if you know that you have a client that might have a bad back, so we want to work with you, let you know, there's probably going to be an exclusion, but if they would rather have a longer benefit period or a longer elimination period, we can work with you and find out what their hot button is. So maybe if we have the realtor that, maybe take an anti-inflammatory for a knee injury, we could either look at doing a 180-day elimination period with no exclusion, or we could look at doing a 90-day elimination but throw a knee exclusion on there. Really work with your clients to find out what their hot button is, what's going to help them accept this policy. If they're against any kind of exclusion, let us know that. We can't always go without exclusions, but we definitely want to work with you to provide that coverage to your client. Another area that we like to set ourselves apart is we will talk directly with you as the agents about complex cases. If you have a scenario that you're not sure if we could look at them for coverage, or you're not sure how you should sell it, call in and talk to an underwriter. We'll let you know that, hey, we might not be able to look at them for a to age 65 benefit period, but this is the best that we could do, so that we can set that expectation up front with the client so they're more likely to accept it once the approval is made. We do all underwriting and personal telephone interviews in-house, which is huge. We work very closely with our telephone interview department. We try and prevent as many callbacks as possible, so we work with our interview team to get all the information, all that complex medical history up front, and get us all the details that we need so that we can contact the client as few times as possible. We also have the convenience of an e-application and also a drop ticket. So with this e-application, this is great to use if you're working with people over the phone. If you don't have time, or if the client has a busy schedule and you just can't meet face-to-face, this e-application is a great tool to use. Because you can there's 3 different signature options that you can use, which includes a click wrap or an email signature. If you are meeting with them face-to-face, you can do a face-to-face signature as well, or you can print the application out still and do a wet signature on it, if that is easier for you as well. But by doing this e-application, it helps prevent any misses on the application. So there's fewer amendments. It's easier to read. We don't have to try and interpret handwriting. So it's a lot smoother process. The drop ticket is my ultimate favorite. It's easy for the agents, it's easy for the clients, and it makes it a lot easier for underwriting as well. What the drop ticket is just a one-page document that you have to get, basically collecting just the general information from your client: their name, date of birth, social security number, address, the benefit amount applied for. You send that to us along with the HIPAA authorizations, and then we take it from there and do all the work for you. We have our telephone interview department call these clients and basically complete the application over the phone. This takes out the step of you having to collect all the medical history and asking the client some of those uncomfortable questions in the health section. We do it all for you. And by us doing it, again, there's no misses on the application. We obtain their signature on that application on delivery, and it just basically simplifies everything for you as the agent. As Scott had mentioned earlier, we also, for our limits, we don't generally do medicals for clients up to the age of 50 with a benefit amount of $3,000 or below. So this is huge, especially as we're looking at these middle income clients with these mortgages. This is going to be a big portion of your clients. We aren't going to have to require medicals, and for the majority of them, we won't have to require any income documentation either. Of course, if there is always subject to us having to require those if they do have medical history such as diabetes. But for your general client that's middle-aged and is in great health, we're not going to have to bug them with an examiner coming out, which is huge. So let's start into our case studies here. We're just going to run through a few just to give you a general idea of what we're looking at for individuals that are looking for just to cover their mortgage. So this first case study we have is a 46-year-old male, non-tobacco, and he's an accountant making $70,000 a year. He has a $425,000 mortgage with a $2,965 monthly mortgage payment. What this would come out to if we cover his mortgage payment is only $72.25 a month to have the ability to cover that and know that his mortgage payment would be covered if something should happen to him. This is with a 90-day elimination period and a 5-year benefit period. So of course, if they do want longer, it'll be a little bit more expensive, but for the general client, the 90-day elimination with a 5-year benefit period is going to be a great option for them. The majority of individuals that we see go on claim are on claim for less than 5 years. So that 5-year benefit period is a great option to have. So you see here that he's only having to pay 1.2% of his salary to ensure that his mortgage is covered in case of an accident or disability. Know that this individual, he would qualify for more coverage than that monthly mortgage payment if they were interested. But if we're just focusing on the mortgage, he would qualify. With this individual, if he's not self-employed, no income documentation would be required either. So it's a pretty easy case for you. Our next case study here is a 36-year-old female. She's our realtor, just as we had talked about earlier, making $75,000 a year. Again, we're applying for the 90-day elimination with a 5-year benefit period. She's got a $300,000 mortgage. So her mortgage payment is $1,950. So for her, if we're just covering that mortgage payment, she's only having to pay $43.09 a month to cover that mortgage. And again, no income documentation would be required. She would qualify for more if she wanted it, but just a small percentage of her income to ensure that her mortgage is covered in case of a disability is huge. And our final case study here is a 37-year-old female. She's in a hospital RN, which would be our 3A occupation class. It's important to note we do have 2 different occupation classes for RNs. Our hospital RNs are a 3A versus a RN working in a general physician's office is a 4A. But this individual makes $60,000 a year. She has a $250,000 mortgage with a $1,798 monthly payment. You'll see here we changed it up a little bit. She's applying for a 180-day elimination period, which is going to make it a little bit less expensive because she does want that longer benefit period. She wants coverage to age 65. Even with this longer benefit period, she's still only paying $68.62 a month, which is 1.4% of her salary. So again, peace of mind for her knowing that her mortgage would be covered. She's still going to have a roof over her head if something were to happen to her that she couldn't work. So with these case studies, I will complete it. I'll send it back to Scott.
Thank you so much, Lindsay. I really appreciate that. Show that those targets are there, and we talked about the next 100 days and triggering, the life event trends are going to be coming up, but you need some tools to make it easier. So at Assurity, we have developed different prospecting pieces there at the top of the funnel. So new consumer brochure is available for you as far as a mortgage protection on our DI product. And then because the growth in the Hispanic market, we did want to make sure that you had those tools accessible to you as well. So here you would see brochures that would be written in Spanish, and also social media posts and templates that are available to you via request. We can send those to you in order to address the Hispanic market for mortgage and DI. Another handy tool that we've been really promoting here as of late and really getting great feedback for you from those of you in the field is our disability insurance quoter. So diquoter.assurity.com is where you'll find our branded version of this. And this tool allows you to give a very easy quote, a very easy means to give a quote for our disability insurance product. You can use it on your desktop or your phone. And one of the things I really like about this tool, there's a couple things I really like about this tool. One, it pre-fills your occupation stuff. So once you start typing in, if you're looking for, that accountant, for example, that Lindsay talked about in her case study, then once you start typing ACC, it actually pre-fills that for you. So very easy to run these things on a phone. A lot of different carriers will say, okay, is it 4A, 3A, is it, professional service, type stuff. They're making you do the underwriting guide for them versus we're just asking you, okay, what does this person do for a living? And we'll figure that out on the back end. The other piece that's a nice connection on these tools is it does have a fact finder needs-based analysis built right in. So whether you just want to focus on mortgage there or want to go into other expenses, you can do that. Instead of just giving you the generic 60 to 70% rate that most quoters give you, it will take that needs assessment and turn that into an exact quote based on their needs. Usually you have one tool or the other. You usually have a needs tool or a form that you'd fill out, but it doesn't then automatically generate a quote based on that. We're really proud of that on our piece. Now again, this works on a phone or a desktop. And if it'd be the type of thing you'd want to link to or build a branded version for you, for your website, we've done that in several cases for BGAs, IMOs, and others out there. Feel free to reach out to your regional salesperson for more information there. And then because it's just about to start tomorrow, our Disability Insurance Awareness Month, or as I affectionately call a made-up Hallmark holiday, diem in the industry, we wanted to give yet another look at a mortgage disability quoter. So for those of you who are working on the phone these days and just reaching out to people, and sometimes you just want to try to sell something over the phone and you need an easy tool to link to, we are now producing a piece that is focused on mortgage only. So you will come out to a website in which, again, you can reach out to your regional sales representative to find out more on this. You come out to a website, and it's going to be as simple as your prospect entering their address. We go out to Zillow and actually pull their home based on that address. We find out basically how much it costs. We even pull a nice little picture so they know what they're covering. And from there, we are going to generate a quote based on those case study kind of amounts that Lindsay was showing you today. So we're going to take that cost of the home, boil it down to their monthly mortgage, and after they tell us how old they are and their age and kind of what they do, we're going to actually then give you the numbers on how much that would cost for different benefit periods and different elimination periods. Then ultimately, you can add different riders that are available to increase that coverage, to spread even more protection for those people. And then at the end of the trail, it would generate a lead, which would be an email. The person would get a copy of this quote along with you. So with this tool coming up, again, it's for this particular one's for mortgage only. The one at diquoter.assurity.com would be for all needs. And we really do feel that tools like these that you can use on your phone or on your desktop to be able to just text somebody a link or on their Facebook post, submit a link to them to have them look into more protection is really going to help you and ultimately them protect themselves. And if they're living paycheck to paycheck, having quoters that kind of get you that 1% to that 1% of their income is a nice sweet spot that we have found in order to market and to bring in business. So I hope those things do help you grow business in the next 100 days. And don't wait 100 days to reach out to your regional salesperson. They've got these and other tools and tips that they can help you grow your business. But that being said, our webinar itself is done. I really do appreciate your time and your listening in with Assurity today. We do have a couple of questions. The first one I just kind of addressed, it was talked about, for folks working on the phone and reaching out, is this product sellable over the phone? Well, I do think it's sellable, but it's something that has to be sold, right? You have to show and demonstrate the need. And that's where, again, we truly believe that in simplifying that need, right, to show that, hey, you would really want to cover and make sure that people get to stay in your home if something would happen to you that would keep you out of work. And the number one way that you're paying for that house is because you have a job, usually because you're employed and bringing in an income. We want to make sure you're protecting that income. And oh, by the way, why don't you go see how much that would cost you? And here's a link or here's a brochure to find out more. I think those could easily be done and initiated on the phone. And as Lindsay says, after the fact, we'll close a deal for you after a drop ticket over the phone, right? So you submit that information from that person who is interested, the amounts, that they're interested in, and we will take care of the heavy lifting from there. So phone sales do work and ultimately close the majority of those deals. We have another question. Does Assurity have a letter or flyer that can be distributed to a mortgage loan officer with whom I have a relationship? Well, I can't say we do have various mortgage flyers and brochures, but if it's more of an introductory letter on need to like a mortgage loan officer, we don't necessarily have that right at the moment, but that certainly is a good idea and fuel for us in marketing to get that generated here in May. So more to come on that. We've got another question here that somebody who's been selling our product for years has seen pricing changes a few years back, and that women's rates have really skyrocketed. Well, each situation is different. I can tell you we haven't had just general rate hikes on this product for a long time. And yes, it can be true that, the fact that you're a male or female can definitely affect your rate. But as we showed in a lot of, in the 3 case studies today, I feel our product is extremely affordable. I think that we would love the chance for you to run those illustrations again and to see if that product meets your needs, because from what we've seen, the obstacle to overcome hasn't been, the rate hike or increase. It ends up just being hitting the right target with the right message. And then, do we have any occupation-specific marketing pieces, nurses, realtors? Well, we used to have a lot of leaflets that had like a picture of a nurse on the front or a realtor on the front. Those things, we have done a little less of that here in the future because we don't think a lot of things are sold by brochure anymore. So we kind of are trying to keep up with the times by giving people other tools that they could use themselves and self-educate, and taking this particular product and making it a little less complex. And ultimately, in our testing, we haven't found that just putting the picture of the person on the cover sells more product, but making it a little easier on them definitely does. So if there are specific pieces that we've had in the past that you're looking for, you could always reach out to your regional sales manager and let us know if we're missing something. But our progression in the future is to give you more electronic tools versus more leaflets and brochures. Are there any other questions? All of the quoters we went over, there's a question, does this work on a mobile device? Absolutely it does. If you go to diquoter.assurity.com on your phone right now, it will work and is built to be responsive on iPhone, Android, iPad, whatever you'd want to throw at. So I think that's about the end of our question session. Again, I really appreciate those of you who stuck on with us for about 40 minutes, and good luck the next 100 days in getting more sales. Thank you.